Welcome everybody. No long introductions. We're gonna jump right in. We're gonna start with Shlomo Werdiger, Chairman of the Board of Agudath Israel, to give us a little bit of introduction. We've been doing, this is our third in the PPP series webinars that we've done jointly with Agudath, and we've seen lots of success with that, and we're gonna hopefully continue seeing success with that. So Shlomo, the floor is yours.
Good morning, everybody. Zacharia, thank you. Good morning, and thank everybody for joining us. It seems there's a big oilam on here. So the COVID-19 crisis brought with it a lot of uncertainty, as we all know. Nobody knew what was safe, what was unsafe anymore, which of our daily routines would next be declared dangerous or illegal, and whose name nebuch. We would hear in hushed tones nebuch. We heard so many friends that were taken to the hospitals, and so many friends personally who were nifted nebuch. So in comparison to such fundamental challenges, the decisions facing business owners and moistis may seem inconsequential. But we all know that's not the case. Students and faculties were no longer allowed to come to yeshivas, and businesses, supply chains were disrupted, vendors were unable to pay, sales were ground to a halt. Whoever has complaints, come to me. I'm in the sports business. Everything in sports has stopped completely. So many family businesses were perilous risks. So I think the need for major government intervention was apparent from the very start. And Baruch Hashem, it came relatively soon, and in the form of the PPP loans offered through the SBA. The challenge, which was the case in most government programs, is that the guidelines and requirements were very difficult to understand. The average business owner and moistis, faced with so many challenges, would not be able to determine their own eligibility and qualifications. And that's where Baruch Hashem, this shutvis of the Agudath and Roth&Co, where we stepped in. And the Agudath stepped in, fielding thousands of calls for assistance in various offices nationwide, serving over 30 from communities. We set up task forces in over 30 states, to address these questions from the moistis and from private businesses. We arranged together with our partners Roth&Co and Cross River Bank, we arranged a series of informative webinars that were accessed by over 3,000 institutions across the United States. I can't tell you personally how many people I refer to the Agudath, people, small businesses, bigger businesses, that it was mamish atzolas nefashos, just like COVID and the physical damage that could be done, the everlasting damage that could have been done to family businesses. They spent years and years, how many thousands of Yiddish panosas were at stake over here. And so I can't begin to tell you the huge benefit that the oilam was provided by these webinars with the services of the Agudath. I just got off. We have, since COVID, just to let everybody know, this is not a plug for the Agudath, but since the COVID started, our staff has been working literally 24/6. I get on the call every single morning at 11 o'clock. We have a Zoom call with all of our staff members throughout the country. The amount of dedication and work that was put in, and in particular, helping the moistis navigate this, helping to see that they get the money so they could pay the teachers, they could pay the moras, they could pay the melamdim, that our children should have this Zoom education, which Baruch Hashem they're having, and all the financial hardships that we're going through in the community, which is alleviated somewhat by these informative webinars. So with that, I would like to introduce Ahron Golding, Esquire, a tax controversy attorney. I don't know what that means, but I'm sure it's a tax controversy. I have a controversy with my taxes every.
You shouldn't have to know what it means, Shlomo.
Okay, and Ahron and the staff at Roth&Co, and I must commend my dear Chavra Shia Roth, Abe Roth, who's been a friend for dozens and dozens of years. He should be gesundenstark together with the staff for the service they're providing. That's with Agudath Yisrael for Klal Yisrael. So he'll discuss the recently released PPP forgiveness application, which is the next step in ensuring that your businesses continue recovery. So we're grateful for Ahron for his time, to Roth&Co for your partnership, and for all of you for joining, and we should have much hatzlacha. And with that, I turn it over to Ahron and to Zacharia. Thank you.
Thank you, Shlomo. I just want to quickly say before Ahron takes over is that we, we're monitoring the questions, the webinar chats, and the questions. We're going to try to answer as many as we can. And like always, after this webinar, we'll address all the questions by email follow-up if we didn't address it live. And Ahron, go for it.
I am very excited that you are here today. We're going to talk about a topic that I am very passionate about, PPP forgiveness and all of the updates involved. So hopefully we'll be able to help answer many of the questions that have been coming out. Just some housekeeping. This is not legal advice. We're just sharing what we know now about the PPP. These things are still changing by the minute. It's very possible that new guidance will come out as we speak. In fact, new guidance came out this morning in a new final rule. So there's all kinds of stuff coming out. What I'd like to do is just share briefly what happened in the new law and some of what's going on in terms of deciding whether to choose the 8-week period or the 24-week period. Unlike audits and IRS collection matters, if somebody would ask me what was going on, what was going to happen in an audit or a collection matter, I could probably tell you based on experience, based on court opinions. No one has gone through PPP forgiveness yet, so we don't know exactly how it's going to be processed, but we'll do our best, and hopefully this is a tremendous opportunity to help a lot of businesses that are in a lot of pain. Okay, so first I'm going to give a summary of changes that happened with this new law, the Paycheck Protection Program Flexibility Act, which happened on June 5th. So the basic change is that the covered period, which means the amount of time that you have to spend the money, is now a 24-week period instead of just an 8-week period. Gives people breathing room to be able to have time to spend that money. There also is an option, if you got the loan before this law, before June 5th, then you have an option to stick with the 8 weeks. And we'll be talking about why you'd want to choose the 8, why you might want to choose the 24. There is no middle ground between choosing the 24 or the 8 weeks. It's either or. We're going to discuss the pros and cons. And what just came out this morning in the new rule is that you could apply for forgiveness anytime, even during your covered period. As soon as you have spent the money that you're going to, try to ask for forgiveness for, you are allowed to ask for forgiveness. So we're going to talk about still what the pros and cons are, and we'll get into some of the details. The other things which changed in the law, the payroll costs are now 60% instead of 75%. So you should spend at least, in order to get full forgiveness, you have to spend at least 60% of the loan amount on payroll. And the SBA has clarified that there is no cliff, which means if you spend a little bit less than 60%, you don't lose all of your forgiveness. You're just going to lose some forgiveness depending on how much less you spent on payroll. So in order to get full forgiveness, spend at least 60% on payroll.
But you don't have to spend 100% on payroll, right?
That is correct. That is correct. You're allowed to spend as much as you want on payroll. It's called the Payroll Protection Program. Other things that were added in this law, the FTE safe harbors for reductions in headcount. They added certain safe harbors. You might be familiar with a date prior to this new law, which was that you have an opportunity to rehire people. If you let people go between February 15 and April 26th, you have an opportunity to rehire them. Now that date is not June 30th. Now the date is December 31st. So it gives people a longer opportunity, not just to spend their money, but to rehire them. That came primarily from like the restaurant industry, where they're saying, how can I rehire everybody? I'm still closed. There's another safe harbor, which is that you couldn't rehire or find a replacement by December 31st. I believe that's going to be kind of rare for you to be able to show that you tried to rehire people and couldn't find anybody before December 31st. There's another one, which is a biggie, that if your business could not operate during your covered period, either 8 or 24, at the same levels as before the virus, and you couldn't operate due to guidance from federal agencies, the CDC, there is a general reduction in, if there is a reduction in headcount, that means if I let people go, I will lose that amount of forgiveness. So if I lost if I let half of my people go, I'm gonna lose half of my forgiveness. However, this is a safe harbor to not be penalized for that reduction if the reason why my business was reduced is because I was following the guidelines of the CDC and other federal agencies that basically said because of social distancing and because of other reasons, I was not able to be in business. And therefore, if I was following those guidelines, and my assumption is that even though they only discuss federal guidelines, my assumption is that if your governor, because of those federal guidelines, decided to order closure and therefore your business couldn't operate, that will also be a reason why you were not operating and you had to reduce your headcount. So therefore, you will not be penalized for that. That's a big addition in this law. Another addition in this law, which might not apply to so many people, is that if you got the loan after June 5th, it's now a 5-year loan instead of a 2-year loan. If you got the loan before that, then you could negotiate with your bank to extend it to extend it from a 2-year loan to a 5-year loan. Practically, most of the banks that I have heard about have been saying, no, I'd rather get the loan off my books quicker. So therefore, practically, there's not that much difference in that extension. There's another big thing in this law, which is that a business is allowed to defer the employer part of their payroll taxes. So all of your payroll taxes, the employer part of the payroll taxes from March through December of 2020 can be deferred, and it would need to be half of it paid at the end of 2021 and the other half in the end of 2022. That is a major deferral. In the old law, you're only allowed to use that deferral if you did not get forgiveness. In this new law, every business is eligible for that deferral, even once you get forgiveness. So that's just a major thing. I would just recommend that a person, if they're going to use that deferral, to put aside the money, because I could already see businesses 2 years later, they spent the money and suddenly they're walloped with a bill of a lot of payroll taxes. And I know from my experience that leads to a lot of trouble. So just make sure you speak with your advisor as to how best to deal with that and plan for that appropriately. Talking about the new forgiveness applications. So the SBA came out with a new revised regular application and something called an EZ application. This is a tremendous benefit to many businesses, because if you qualify for the EZ, there are less documentation requirements and the form is a lot easier to fill out. The EZ application, perhaps there might be less scrutiny by the SBA once you get it. That remains to be seen, but I think if you can do the EZ, for sure do it. And we'll talk about what the qualifications are. But on the applications, it clarifies a few things that we were waiting to see how the SBA would interpret the new law. So self-employed people can now get full forgiveness if they choose the 24-week period. That's a major benefit. It used to be that the max of any self-employed person was $15,385. Now, if I choose the 24-week period, I could get a self-employed person without any employees could get a salary replacement of $20,833 forgiven, which is basically the same amount as what was in your loan. So it's that's a tremendous deal for people that are self-employed. You can't give yourself a raise and pay yourself more than that. The max is that either the 2833 or whatever 2.5 times whatever was on your 2019 Schedule C, the net income. The 100,000, it clarifies in the law, the 100,000 max per person, in other words, the max forgiveness of the 2833 if you use the 24 weeks, or the 15,385 if you're using the 8 weeks, that goes across all businesses. So therefore, if somebody has 5 Schedule Cs, he cannot get forgiveness for each of the Schedule Cs. The SBA makes it very clear that it is per individual across all businesses. For non-owner employees, so that means they're not owners, they're just employees of a business, then the maximum forgiveness is now, instead of 15,385 for 8 weeks, if you elect the 24 weeks, you have now a max of 46,154. So therefore, it just gives you an opportunity to spend a lot more money on payroll costs. You do not have to wait until December 31st to apply for forgiveness. You could apply at any time once you've spent your money. The general idea of the qualifications for the EZ form are following 3 things. Number 1, you're self-employed without any employees. Number 2, you had no FTE loss. FTE means full-time equivalent. Basically, it's my head count. It's determined by a 40-hour work week. And you just say, how many employees did I have? If I did not lose, there are many businesses that have been operating or paying. It makes no difference whether you were operating. The difference is, were you paying your employees? If throughout, from January 1st all the way through the end of my covered period, if I did not reduce my head count at all, then I qualify for the EZ. And the third option is if I did reduce my head count, but I have a good excuse for reducing my head count. I have a safe harbor. Those are basically the 3 circumstances. So if I did not reduce the salaries or wages more than 25% for those employees that are earning less than $100,000 a year, I'm not allowed to reduce their salaries. And I'm not talking about reducing hours now. We're talking about reducing their wage rate. So for working the same amount of time, I cut their salary in half. There would be a penalty for that salary reduction, whatever is more than a 25% reduction. If I did not reduce the salaries or wages by more than 25%, and I did not reduce the number of hours or number of employees, I qualify for the EZ form. And the third one, which is the safe harbor that we spoke about before, which is if the business experienced reductions in business activity as a result of the health directives related to COVID-19. And I didn't reduce the salaries or wages by more than 25%. So if I qualify for that safe harbor and I did not reduce the salaries or wages, then I am good for the EZ form. Once I am in the EZ form, you're not going to have to reduce anything based on FTE the full-time equivalent, because it's already, you're certifying that you're qualifying for the EZ form, and therefore you're saying you either didn't reduce your employees and wages, or you have this valid safe harbor for reducing your employees because the business couldn't operate at the same levels. There is no, one of the important things is there's no monetary limit in terms of the qualification for using the EZ form. It's not like the loan amount has to be less than 100,000 or less than $1 million. As long as I qualify under those, either any of those three things, I qualify to use the EZ form. It doesn't make a difference how much the loan amount was. Okay, now we're going to get into the nitty-gritty of the 8 versus the 24 weeks. I've been getting many calls and emails. How do I determine whether I should choose the 8-week period or a 24-week period? Why would I choose one over the other? So first I'm going to discuss the advantages of using the 8-week period. The advantages of using the 8-week period are, well, I guess before we even do that, if somebody is self-employed without employees, it's pretty much a no-brainer to use the 24-week period, because as we said before, you're going to get more forgiveness. You're going to get up to full forgiveness. So if you're self-employed without any employees, you're going to get that 2833 totally forgiven. The advantages of choosing the 8-week period. So for businesses, people that are not self-employed, businesses that have employees, many businesses have been telling me, I just want to get it over with. I want to get forgiveness faster. I want to get on with my business and not have to call Ahron Golding every day and a half and find out what the new laws are in regards to the PPP and what I'm allowed to spend the money on. I could focus on my business. So another option of the 8 weeks, and this is a biggie, is that if I choose the 24-week period, then what they look at in terms of me maintaining my payroll or maintaining my FTE count, I have to keep it over my entire 24 weeks. So if I use the 8-week period, and many businesses have already kept their FTE throughout their 8-week period because they knew they had to, and they're nearing the end of their 8 weeks. So if you extend it out 24 weeks, you're going to have to measure your payroll, your FTE count throughout your 24 weeks. Another thing related to that is that this safe harbor of being shut down due to the virus because I had business reductions because I was listening to federal guidelines, that will really primarily help you for the 8-week period because businesses are starting to open up. And therefore, if I choose the 24-week period, that excuse might fall away if everything is able to open and able to operate. Then I'm going to have to worry about my FTE count. I'm not going to be able to use that gift of this safe harbor of, I was listening to the federal guidelines. The other thing is that you never know what type of rules the SBA is going to change on us. Some people like predictability. You can't choose in between 8 or 24. Some schools are closed during the summer, and therefore they know they're going to lose FTE count, and therefore they're nearing their 8 weeks. They might want to just finish it at the 8 weeks and not have to worry about any additional, rehires or whatever is going to happen in the fall. The other thing is nobody knows what's going to happen tomorrow, let alone in the winter or the fall. It's just, nobody knows if there's going to be a second wave, if business is going to have to be shut down in the fall. So there's an option to grab the 8-week forgiveness and you've spent your money, that's a tremendous advantage to being able to apply right now and not having to worry about what if. There's another advantage to the 8 weeks in getting the loan off of your books. Many borrowers who they need to maintain lines of credit with their bank or get other loans, and they're being told by their bank, wait a minute, you have a huge SBA loan. How do I know that's going to get forgiven? It's still going to be on your books for a while. So some people want to get it over with in order to be able to have access to that credit. The other possible problem with the 24 weeks is that the longer you wait, you might have potential tax issues in filing your 2020 return if you haven't gotten forgiveness yet. Let's say there hasn't been a decision made on forgiveness and it's time for you to file your 2020 return. We know that the IRS has stated that if I get forgiveness on an expense, I am not allowed to take that deduction, that business expense on my tax return, because that would be double dipping. So if that law, that guidance stands the way it is, people might have issues about not knowing if my loan hasn't been forgiven yet. Well, can I take that payroll and that rent as a business expense or not? So that might be an advantage to getting forgiveness quicker. The bottom line is, if you could get full forgiveness after the 8 weeks and your FTE and the spending work out, you either didn't reduce payroll or you have that safe harbor that you had to be closed, or not just closed, but your business was reduced because of the guidelines, then why risk waiting? Why not go for it? That's all on the side of the 8 weeks. Now we talk about the advantages of the 24 weeks. First of all, you have, like we mentioned before, you have more time to spend the PPP money and get forgiveness. This was the primary reason for the law change. So therefore, I could ramp up my business if my business was closed. Now, I have some clients that have, they're event planners. They run events. They were totally closed. If you give them 24 weeks, now they have an opportunity to be able to spend that money on payroll for people that are actually working. In addition to that, you have more dollars that could be spent on payroll, not just the time, but because you have 24 weeks to be able to spend your payroll, you're able to spend a lot more on your payroll. And therefore that could possibly compensate for any FTE reductions, for any headcount, any reductions in forgiveness. So for example, let's say somebody did lay off half of their staff, so therefore they're going to lose half of their forgiveness. But there is a possibility that because of the extra payroll spending that they're doing, maybe they spent more than twice of their loan amount on payroll during the 24 weeks. So therefore, maybe it could compensate, even if there is an FTE reduction, they might still, that's another advantage to the 24 weeks. It gives you the opportunity to spend more. There also is going to be more certainty regarding which costs are forgiven if the SBA comes out with more guidance. So you'll be able to spend more costs on the things that you know for sure are going to be forgiven. We have spoken in the past about certain things like QTR for schools, where they pay tuition for their teachers, for their employees. Things like workers' comp. The SBA has not come out with guidance as to whether those are forgivable expenses. If I have 24 weeks now, I could spend my PPP money on things that I know are for sure forgivable, which are, payroll costs, rent, stuff like that. It'll give me that opportunity to use it better, and you'll have opportunity to discuss with your advisors for a longer period of time to decide what you want to do. Now, there is no deadline as to when you have to choose between the 8 or 24. You could apply for forgiveness whenever you apply for forgiveness, and that's when, I could even choose the 8-week period if I want. If I apply later in the summer, makes no difference. So The bottom line is what we're doing here at Roth&Co is we're doing the calculations and we're crunching the numbers for our clients to determine the best choice. Unless you crunch the numbers, if you just push it off, and you say, oh, I'll do the 24, you're not going to have the data to make the prudent choice. And therefore, if there is an option, if your business has been open, making your payroll, and you've been able to use your money in the 8 weeks, that might be a tremendous opportunity. So it's just worthwhile to have somebody crunch the numbers or do it yourself if you're capable of doing such. Jumping right into the safe harbors. So as I mentioned before, the one that I believe is most feasible right now is the one that the business couldn't operate during the covered period at the same levels as before the virus due to compliance with requirements established or guidance issued from March to December by the CDC or HHS, OSHA, those federal agencies. I believe, as I mentioned before, that that's a good safe harbor which many businesses might be able to avail themselves of. There's a Rehire safe harbor, which used to be one of the primary safe harbors before this new safe harbor came out, that basically says I could restore my employees. Once again, that is extended to December 31st. So as long as I restore or rehire and do I have to rehire the same person? No, I just have to make sure that I restore the headcount to the way it was before February 15th. Now this rehire safe harbor, it's important to note, only applies if I reduced my headcount between February 15 and April 26th. So that's sort of an anomaly in the law that, if I was a good boy and kept my payroll all the way through, past April 26th, and now I need to lay people off, well, that rehire safe harbor is not going to work. I have to now measure my entire period or qualify for a safe harbor that we mentioned before about that I couldn't operate. So that's something that's important to note. If I want to use the rehire safe harbor, that's only if I reduced my headcount between February 15 and April 26. There's another new safe harbor we mentioned in the beginning. I believe it's going to be hard to prove, which is that I tried to rehire people, but I couldn't rehire them before December 31st. That pretty much means you have to show some kind of documentation. I'm sure the SBA will tell us what you have to show, but show that you were not able to hire people all the way through December 31st. Might be kind of hard to prove. There's a big one that a lot of businesses have been doing based on prior guidance from the SBA, which is that if you give a written offer of rehire to an employee and they refuse, then you're not penalized for that, which is true. The problem that many businesses have been finding is that they send this written offer of rehire and surprise, surprise, the employees are not responding in writing, sorry, I'm not coming back, because they don't want to lose their unemployment possibly. So therefore, they're just not responding. So how can I fulfill the guideline of documenting their refusal if they're not going to give me a way to document their refusal? I believe the SBA is going to come out with guidance to be able to explain exactly how to document that in such a circumstance, but the way it is now, it's probably not that practical. And also that you need to report these employees to the Department of Labor in order to qualify for this, exemption of your FTE loss. You have to, basically snitch on your employee and say, I offer them to come back, and they said no. So, you know, you could listen to the other Agudath webinar regarding unemployment, where hopefully they will discuss that issue. But for PPP purposes, it's probably, you know, not that good, and it's probably not so good for your employee relations long term to be reporting them to the Department of Labor so that they lose their unemployment. I think we mentioned the wage reductions. The 25% wage reduction penalty is only wage rate cuts. Cuts in hours are not considered a wage reduction. That's just considered a headcount reduction. So therefore, if I, you know, told my staff, okay, you used to come in 40 hours a week, now only come in 20 hours a week and we'll only pay you for 20, that is a reduction in headcount. That means you're losing half of an FTE, but you don't have to worry about the salary reduction because you didn't reduce their salary. You just reduced their hours. So therefore, the salary reduction penalty is only if you actually sliced their wage rate, their salary for doing the same amount of work, which based on my speaking to a bunch of people has been kind of rare for people to be able, for people giving cuts to people who earn less than 100,000 and cutting their salary across the board more than 25%. Many people have been asking, can I lay off employees right after my covered period? You know, I was holding my breath, taking this PPP money, and you know, now my covered period is over. Can I lay them off? I don't have any work for them to do. And the answer is, sure. There is nothing preventing you from applying for forgiveness, and you apply for forgiveness based on your FTE amount or safe harbor based on the date that you apply for forgiveness. If you know, business reality is such that I can't afford to keep them on the payroll, then, you know, you will not get a reduction for laying them off after your covered period is over. The actual forgiveness process. The forgiveness process, and there's just one thing I want to mention on the form, because in the questions that we received before this webinar, this question came up often, and there are a bunch of clients that have been asking me the same question. And it's kind of detailed, and when you look at the form, if you have looked at the form, then you probably know what I'm talking about. And if not, then you'll see what I'm talking about when you look at the form. And this applies to the, on the EZ form, it's line 7, and on the loan forgiveness, the regular loan forgiveness form, it's line 10. On the EZ form, it's line 7. And basically it says payroll cost 60% requirement. And then in parentheses, it says divide line 1 by 0.60. And many people have been asking me, wait a minute, that means I only get 60% of my payroll forgiven? The answer is no, because you divide line 1 by 0.60, not multiply by 0.60. If you would be multiplying by 60%, then you would be getting only 60% of payroll. This line is just the accountant's way of making sure that you spend 60% of your forgiveness amount on payroll. That's just the way it works out. When you do the form, you'll see that it works out. Just make sure you're dividing line 1 by 0.60 and not multiplying. Is there a deadline to apply for forgiveness? As of now, there is no deadline stated to apply for forgiveness. However, what we do know from the new law is that you have now a payment deferral for 10 months from the end of your covered period. So if my covered period ends October 31st, I have another 10 months from there to apply for forgiveness, and I still do not have to make any payments of principal or interest to my lender. It's deferred. And then once I apply for forgiveness, I also, the until I get a forgiveness denial, hopefully not, but until I get a forgiveness denial from the bank or the SBA, I am not going to have to make any payments. So therefore, that's just a tremendous benefit. So there is no set deadline to be able to apply for forgiveness, but it seems from here that you're going to have at least 10 months to be able to apply for forgiveness, at least. After that, you'll have to start making payments of principal and interest. The timing of the forgiveness, the basic idea is once you apply for forgiveness, the lender, the bank has 60 days to come back and give their decision. They then tell the SBA, hey, we've decided to give these guys full forgiveness. The SBA now has 90 days to decide whether they're going to look deeper into it, to review it, or decide right away, okay, we agree with you, give full forgiveness. So basically, it's up to 150 days for most PPP loans. I'm assuming the easy ones will probably go quicker. That's my guess. But basically, the lender is just going to look over your application, give a quick look over. They're going to make their decision. They're going to give it to the SBA. The SBA has a right to deny it. They will then make the lender be the bad guy and tell the borrower that half of their loan is not forgiven, or we believe they were not eligible for the loan to begin with, and then you'll have an opportunity to respond to the SBA, and if you don't like the decision, you'll have an opportunity to appeal also. So these things will probably be going on for a while. In addition, you want to make sure to keep your records for 6 years because the SBA has up to 6 years to audit these. So therefore, you want to make sure to keep all of your documentation. If you relied on any safe harbors, keep all of the documentation that you have, the offers to rehire, their refusals, or the guidance that you relied on to not be able to open up. All of those things, make sure you keep in your files in the event that you get audited. Some people have asked, they heard that there is a push, and there is such a push for Congress to be able to automatically forgive loans that are less than a certain amount. That's something that banks have been asking for. They would certainly appreciate it. Congress at this point has not passed any bills in that regard, so we'll just have to see how that comes up. I believe word on the street is we don't give free forgiveness, forgiveness for nothing. We're not giving handouts. If you use it for payroll, then prove that you use it for payroll, and at least fill out 1 page of a form. Now that there's this easy form, I don't think there could really be an argument for small businesses that didn't have much. They don't have to fill out an 11-page application. It's just a simple, form, what to fill out. So chances of such a law passing, you never know with these things, but I wouldn't bank on such a law being passed. Other related issues to the PPP is that a few people asked about the EIDL loans. Those are special disaster loans. Those are real loans. They're not forgiveness, but there is a part of it which is forgiven, which is the EIDL advance. So many businesses have gotten the up to $10,000 of an emergency grant. That's basically per employee, $1,000 per employee, up to $10,000. That amount does not have to be paid back, but for the purposes of PPP, that advance amount will be reduced from your forgiveness. So in the end, you end up having to pay that back because that amount will be reduced from your forgiveness. So you can't double dip. You're not going to have something forgiven twice. If you had that loan amount, that advance from the EIDL, it's going to be reduced from your forgiveness. If you got a PPP loan, whether it was forgiven or not, you are no longer eligible for the employee retention credit. We don't have time to go into the details, but it's a tremendous benefit for employers, and you could get tax credits. There are, to be taken against your payroll taxes for employees. It's a tremendous benefit for those that couldn't, qualify for the PPP. You just want to make sure that you're not doing both, because it's very clear in the regulations that once you get a PPP loan, you're not eligible for the employee retention credit. Discussion of audits of PPP loans. I know when these first came out, there were all kinds of threats about audits, and then the SBA came out that they're not looking at need requirements for any loans under $2 million. So for loans under $2 million, they're going to assume they could still audit you to say, hey, you weren't really eligible because you had more than 500 employees, or because we think you took, overinflated your payroll. They could still come back and talk about eligibility, but in terms of the need, they have said under $2 million, we're not going to look at need. If it's more than $2 million, it's a good idea to just put in your files why you, the current uncertainty made it a requirement, for a business requirement for you to be able to get that loan and keep that in your file. If you want to have a study done where, you can have a forensic accountant look at all your books and records to see the way it was at the time and make that argument for your file depending on the size of your loan. We have done that for a bunch of clients also. The SBA has also done an about face, and in the beginning, they said they're not going to release the names of PPP borrowers. Now they have changed their mind and said that any borrowers that earned more than $150,000, they are going to release the names, certain parts of the loan. They're not going to release the exact amount, but they're going to basically say, okay, between 150,000 and 500,000, these are the names. And then, that's basically what they're going to be releasing to the public. I think that's pretty much it. I hopefully covered most, if not all of the questions. If there are any questions that I did not have an opportunity to cover today, I apologize, and please continue to send them in, and hopefully we'll be able to respond in the future, and we will be sending out a recap, an update with this. I know this is a lot to digest, and I apologize if I was speaking really quickly, but thank you very much for your attention, and may you all have a wonderful day and a wonderful business and achieve full forgiveness. Thank you.
Thank you, Roth & Company, for giving all the time and to help people. And Mitzvah Hashem, I'm sure this is not going to be the last of the webinars. And it looks to me like next time we should allot a little more time. Everybody seems to have a lot of questions, and since Ahron, you're stuck in Atlanta anyway, you have nothing better to do with your time. So we'll make sure that we utilize your time. Thank you, everybody, for joining, and tzlacha to everybody. Thank you so much.
Thank you, Shlomo. Thank you, Ahron. I just want to tell everybody again, we're going to reply to the questions, and we will, again, we would have done it anyway, but we'll just be, maybe a little bit better at the write-up. We will do a follow-up write-up of summarizing everything we just talked about today to make up for if anybody missed anything over the choppy audio, and hopefully next time will be better. Thank you all. Take care.